Hey everyone, welcome back to the Your Money Life podcast. We are doing this every week and we're on episode 307 of the pod. So make sure you like, subscribe, 5-star rate and review. Leave a comment if you have something interesting to say or something that we should all discuss. So make sure you do that. Let's jump right into it. The pod this week, we're talking about many different things. We will first discuss the market because we start with the market pretty much every week. Let's look at the chart. The chart is showing us the S&P Spider S&P 500 ETF Trust. We are looking directly at it on YouTube. And last month, we've been about flat. The past 5 days have not been great. And primarily yesterday was the biggest pullback from the market. A lot of different things at play. There's, economic numbers coming out, jobs numbers coming out. There's understanding of what's going to happen with inflation. There's an understanding there. There's the market trying to understand what we're going to do, what the Fed is going to do rather, when it comes to, inflation and cutting rates. And so that's the big themes of the market, as well as we'll get into earnings season as well. And it's also the last month of the year. Historically, where people are busy, traders are busy, people are leaving for vacation, for family time. And so, yeah, you'll have a lot of that in December. But year to date, again, another strong year, 14% so far. We haven't finished the year off. We have a little bit more trading to go, a couple more weeks of trading this year before we finish off. But again, another strong year, and people, love to complain. People love to not trust the market. But if you look at since 2022, let's pull it out. We've had a rather strong time in the market. We had a dip in April, May, March, late March, April of 2025, and then we rebound into higher highs. Let's look at the past year. Year to date, again, the April drop off rebounded and been strong, right? And so, again, you want to take all these things in totality and think longer term when you're looking at the market. Like that's just a given. You want to think longer term because, again, trying to time things is really, really ineffective for 99% of people. Really, really ineffective. But let's look at what the market is talking about. So, the basic things are you're seeing is that there's going to be a release of November's consumer price index reading. It's due this morning. We'll get that information probably after I drop this pod. So we'll see how the market reacts to the numbers that are released. It will also mark the first consumer inflation report issued to the public since the US government shutdown ended last month. Economists polled by Dow Jones predict that the headline inflation grew at 3.1% per pace year over year. That's pretty high. That would be a increase in our readings. So stocks, of course, are coming off. Yesterday we're coming off a rough trading session. It was a little bit of a pullback, led by semiconductor names, artificial intelligence trade, AI trade. But the three major indexes are up handily this year. Oracle also slid. Someone is saying there's reports that the cloud infrastructure company's primary investor for a $10 billion Michigan data center is pulling out. So people are concerned about high capital costs behind massive data center deals. So that was the biggest thing in the market. Again, super slow until we get this reading on, you know, CPI, which is coming out rather shortly. I believe 8:30 a.m. Eastern time for our Eastern folks. And so we'll watch that closely again. I'm doing a little bit earlier because I have a busy day, so I'm recording a bit earlier. But that's the big news. Let's jump into actual business update news. OpenAI, they're doing another funding round. They just keep taking funding in. This is like they used to be. I can tell it used to be a nonprofit because they're just taking funding, donations. It's not really donations because people are probably going to print a lot of money from these investments, but they're taking another funding round. It's going to be eyeing a $750 billion valuation. This is according to reporting the information. It's anonymous sources. Financing discussions are still preliminary, but the report said it would entail raising tens of billions of dollars. The still unprofitable artificial intelligence heavyweight was last valued at 500 billion after a share sale in October. So they're just raising money because they need to have infrastructure. They need to have the ability to scale. And this is a company that's probably going to be, before they go public, $1 trillion worth company. And I don't know if that's ever been done before. I just don't know. These are numbers that are eye popping, eye gouging numbers. Talking about more deals, Warner Bros. So you don't understand, we understand that Warner Bros. And Netflix There's a whole dance right now um, between Warner Bros., Netflix, Paramount. So the Warner Bros. Discovery wants a personal guarantee from billionaire Larry Ellison. They want it from him, not an opaque trust that he's fully committed to his son, who's leading this effort, a $77.9 billion bid to buy the media giant. So Paramount, if I'm not mistaken, the board advised shareholders on Wednesday to rebuff Paramount's Skydance hostile takeover bid, claiming it contained gaps, loopholes, and limitations. Paramount's attempt came just days after Netflix announced an agreement to buy WBD Studios and streaming business, which the board says will offer consumers more choice and value. So Warner Bros. Discovery is up for sale. Paramount is trying to make that move to buy, but so is Netflix. And they're really in a pivotal moment. They're fighting to see who will get those assets. The studio and the streaming business, which will be lucrative for the buyer. Again, we're talking about billions of dollars here in content over decades for Warner Bros. Studios. So they're trying to buy those assets, and it's a battle between Paramount and Netflix. I think Netflix wins out. We'll see. Netflix again is content king. They want as much content as possible because they know that's all that matters is eyeballs watching their content. And we've always said that from the beginning. I think they win this battle, but we'll keep a close eye on it because it's really heating up. It's really interesting. More news in the streaming and entertainment world. The Oscars are headed to YouTube in 2029. The Oscars red carpet will lead straight to YouTube. The Academy of Motion Pictures and Arts and Sciences announced Wednesday that it struck a multi-year deal giving the video platform exclusive global rights to the awards starting in 2029. Live coverage of the red carpet, the governor's ball, and the ceremony itself will be offered to free to viewers around the world with audio tracks and closed captioning. I don't watch the Oscars that much, but I did find this interesting just from the standpoint of like, that's pretty cool. I mean, the Oscars are now going to be on YouTube. I mean, can you imagine that? The Oscars, you think of it as a really sophisticated, elevated event, and now they're just going straight to YouTube. It's a really interesting understanding of what streaming is and, what like how the landscape is shifting. It's not linear TV network, it's now going straight to YouTube. So that's quite interesting. And we'll have that in 2029. So we still got 4 years to go, but I mean, hey, you're seeing YouTube and Alphabet gobble up some content. You saw Netflix bought up a bunch of podcasts as well. So content is king, and they're just finding ways to really, really hone in on content. Moving away from entertainment news, I think this is an interesting story. Visa says new AI shopping tools help customers with hundreds of transactions. So Visa has successfully completed hundreds of AI transactions as part of a pilot program it kicked off for a product event in April. The credit card issuer has been working on tools to automate purchases for consumers. A growing number of e-commerce and fintech companies are using AI to revolutionize how consumers shop and search for goods and services. So they're doing a tool that allows people to do transactions using AI. They think they're going to see a material adoption and consumers really start to get comfortable with a bunch of different genetic environments. And this is Visa's growth of products and partnerships. So I think that's interesting. I mean, hey, it's going to take a while for everyone to trust using AI for whatever makes their life more efficient or is better for them. But this is just another avenue for people to potentially do that. So that's something to watch out for. Let's see if there was any other news for us to discuss today. There wasn't crazy again. It's more slow news, and it's really more about closing out the year, spending time with family, doing a research on like a recap of your year and how things went, and going from there. So that's the biggest things that we have this year. I don't see too much, but let us talk about the year-end moves. What are some of the year-end moves that you can do? There are a few. And one of the things is you can max out your contributions to all your different retirement accounts, Roth, traditional. If you're self-employed, of course, you can do the traditional IRA. If you want those after-tax withdrawable contributions, you'll do the Roth. 7,000 is the 2025 limit. You do have till 415, but so some people like to be early. Some people like to get things done early. Harvest losses. That's more of your advisor, but you can, of course, if one of your positions is a losing position, meaning unrealized losses, you can sell to realize those losses and potentially have tax deductible advantages there. Review cash position. Yep, that's another good one. Do you still have extra cash that you want to invest before the end of the year? Savings that increased or built up, and then just setting yourself up for next year, retooling your actual plan. It has things change, new job, different job, lost job. All those things play a part into what's going to happen in 2026. So we want to review that. Those are the biggest items. If there's anything else, and just in general, getting your mindset. Like a lot of things that, you wanted to do in 2025, maybe you didn't do. In 2026, you had the opportunity to do so. So let's do them. Get your mindset right. Start now, not later. Automate things is another good thing to do in 2026. Make sure you automate everything so you're already doing it. Building up cash reserves, I think, is another good thing. That's another good thing for people to look at is building up cash reserves. So there's plenty to do. A lot of them. Let's look at a personal finance question of the week. I think there was a couple good ones that I thought was interesting that I wanted to share with you because it hits the theme. The first one is, what are the three most popular financial actions that Americans are planning for 2026? That is a good one. Oh, I'm gonna have to think about this really hard. Let's see. Three most popular. I think people are gonna be like, save more, pay down credit card debt, and invest. Use credit card rewards. So I was on the credit card theme, but they said use credit card rewards. The answer is number one. Okay, yeah, I have some rewards. Okay, interesting. Save money for emergencies. I did get that. And pay off one or more debts in full. Okay, so it's really interesting. It's in that credit to saving realm, which I hit on two or three of those things. So yeah, that's the most Americans are planning in 20. That's what most financial actions are planning in 2026. And this again is from NerdWallet. They're the ones that gather this survey data. So that's a really good one. Let's see. What next one is, what are the top four holiday gifts that people expect to give this winter? Give. That's interesting. Give. What would people give? I would say a candle. I like candles now. A candle. Something techie. What is like a techie thing that people give? Headphones? Headphones, maybe? Um, what else is an easy gift to give that's like non-problematic? I don't even know. We're gonna have to find the answers to this. And I did too. Okay, clothing for accessories or clothing or accessories. That's really broad, but yeah, headphones fit into that. Gift cards, I should have gotten that. I'm a gift card giver. I love that. I actually like gift cards too because you spend it on what you want. Toys, yeah, that makes sense. It's a kid's thing. Food and candy. All right, interesting. People give food and candy for Christmas. I did not know. That makes sense. Well, what you do know, folks, is that we do this every week. So make sure you're tapped into the Your Money Live podcast as well as on our socials and TikTok. Just using my name, you'll find everything there. And we will talk to you next week.